These are fairly large platforms in which we have made a lot of investments and we expect to invest and grow in the coming years. So both these segments are important. They are also complex in that they're not just one product, they're a set of and a portfolio of products. So what we would like to really use these platform sessions is to open up the fact that so one part of the complexity of our business that most of our stakeholders have talked about is a lot of moving parts. And how we really plan, how we strategize, how we really think about our businesses is at the platform level. So the three things that we want to kind of bring to life and hopefully through these platform sessions is what is really the strategy, the core strategy that is driving, how have the portfolio of assets and capabilities been selected, and how does each platform populate this over a period of time? What have we done in the last 3 to 5 years, and what do we intend to do in the next 3 years? So that is the core strategy that really drives our business and part of that in terms of the overall corporate strategy. What kind of impact these investments are having in terms of our competitive position? And you will see this reflected in these two platforms and in the others that will follow, that over what we have invested in the last 4 to 5 years and fairly aggressively at that, there is a very, very strong competitive position that we have built in these platforms, and there is a structural story in these platforms that we are backing, and it's not just a set of random opportunities that we kind of put together or participated in.
You can see that we are present almost in every continent as far as the nuts are concerned. If you look at almonds, we are in California, we are in Australia. If you look at cashews, we are in India, we are in Vietnam, we are in Africa. Africa is a large producing producing continent of cashews. Then we have hazelnuts in Turkey, and we have peanuts in the US, we have peanuts in China, we have peanuts in Argentina. We have peanuts in India and South Africa as well. So we pretty much encompass the globe in terms of where these 4 nuts that we participate in are grown. It is an attractive growth platform for us. Out of the $34 billion of sales of nuts, we participate in $22 billion in these 4 nuts. To refresh you, all these nuts, whether it's cashews, almonds, peanuts, or hazelnuts, they're all in excess of $5 billion, with peanuts being a little bit more. We have a global leadership in all these businesses because we participate in at least 80% of the producing countries in these commodities, as you saw in the map in the previous slide. We have a strong customer franchise. We have customers with us for the last 20 years. When we started off in the cashew business, as Sunny must have told you, or Shekhar has told you so many times, we started off with the cashew business from Nigeria. 1 product, 1 country, 4 customers, and that was cashew. Yeah? So we have customers going 20 years with us, and we have a strong customer franchise. We are integrated from the farm to the customer. In most of the businesses in the edible nuts, we are an integrated player. We do the farming, we do the supply chain part of it in terms of primary processing, we do the midstream, which is what we call value-added processing, converting it to an ingredient, which goes into all the bakery applications or confectionery or so on and so forth. So we are integrated from farm to the customer. Like I mentioned earlier, we have an experienced leadership team. The top 10 guys, we have a combined cumulative experience of about 175 years in the commodity industry and in the nut industry. Moving on to cashew, we are a leading cashew player with a 20% market share. We have presence in all the cashew producing countries. We process, and the only processor, Amit will tell you a little bit more about it, we are the only processor spread across multiple locations compared to our competition, which are present either only in India or in Vietnam or in Brazil. We are the only ones who are present across multiple geographies, converting the raw cashew nut into blanched kernels to be able to supply to our customer. It has a lot of its advantages. We'll come to that in a bit. We are the number 1 peanut blancher in the US and number 1 ingredient manufacturer of peanut paste, roasted granulates in the United States. And we are the only one present in 5 countries. Every other competitor of ours is present only in 1 country, either in the US or in Argentina or in China or in India. We are the number 2 almond grower globally. We own the number 2 orchards in terms of size globally as far as almonds are concerned, in Australia and in California. The only player in the industry, again, to repeat, with a presence both in Australia and in the United States, whereas most of our competition are present only in one of these countries. We are the top 3 hazelnut supplier today to the industry, to the confectionery industry. I'll talk a little bit more about it when I present on the hazelnuts. If you look at the peanut business, so you've pretty much heard about our story, how we look at the value chain. We look at it as an upstream. We look at it as the Olam core, which is the supply chain part of it, the midstream and the downstream. By downstream, we mean getting into contract manufacturing for our customers and not really getting into the brands. We are the brand behind the brands, as we've probably stated so many times. In the peanut business, we are present in Argentina, as you can see, both in the upstream. We do farming ourselves, and we are also present in the supply chain. Because of our presence in the US ingredients, we very easily can see that we can get into midstream ingredient manufacturing in Argentina, and we can also do that in China, South Africa, and India. So that's how we can be fungible and transfer our learning. So that's the future plan. The light green is what we expect to do in the future as far as the value chain is concerned, and the yellows are where we want to get into new nut opportunities. Moving on, if you see the cashew business, we are present in India, Vietnam, Africa. We are in the supply chain. You must notice here that we are not in the farming, in the upstream. I will leave it to Amit to tell you as to why we are not there in the upstream. In cashews, while we want to be in the upstream, while we want to do the plantation business in almonds, or for that matter in walnuts or pistachios. You can see that even in hazelnuts, we do not want to be there. We want to get into new origins, not in the existing origin. In the almond business, we are fully integrated right from the upstream to the supply chain to the midstream. And finally, the new nut opportunities for us are getting into pecans, walnuts, and pistachios in the future when we find the opportunity. But again, pistachios and walnuts, you will see that we would like to be only in the upstream and the supply chain because the plantation economics are good for us in the business like it is in almonds. As you've heard Sunny saying this many times during some of our results announcements. Finally, the global footprint in our nuts, nut-wise, as I call it. In cashews, we are present in 7 origin countries. We have 20 processing facilities. We are in mechanical cashew processing. We have a cashew ingredient manufacturing facility. We employ close to 23,000 people on a seasonal basis, on an indirect basis. And that's not counted out of the 18,000 people that Olam talks about employing globally. This is beyond that 18,000 people in the cashew business, because cashews essentially involve a lot of labor. It's a very supple nut. It's a very complicated nut to process, and therefore you need to process every single cashew which you will consume here, which is left there for you, has been processed by one person with her or his hands. And therefore, Olam's endeavor is to see how we can mechanize this process so that we are able to scale this. We'll talk a lot about that in the coming slides. We have 7 marketing offices. We are probably the only nut player with so many marketing offices. Everybody else operates from their origin. We want to be closer to the customer, and therefore we felt that we have to be present where the customer is. We have 34 owned manufacturing plants. Like I said, we do about 40,000 hectares of farming and about 26,000 and 3,200 direct employees.
As I mentioned, we're obviously seeing very robust demand fundamentals. There's no doubt about that, and it's extremely exciting. Supply has been keeping pace for the most part. We've taken actually a bit of a pause this year, but to be honest, the market needed to do that. Double-digit growth was going to mean that if that continued, the world was going to run out of almonds as early as next year. So we've seen a little bit of a pause in demand, driven by price a little bit, as it should, but certainly we see it continuing, essentially along the same vein as we saw over the last 5 years. Almonds, we're seeing a lot of that demand coming through from a snack nut perspective. Almonds are quite unique across the edible nuts profile, that essentially up until now it's been really a 50-50 split from a demand perspective between ingredients and snack nuts, but we're certainly starting to see a good increase in snack nut demand in recent times. Again, the health message, but also too, almonds actually has been very competitively priced against other snack nuts such as cashews and pistachios and pecans and walnuts and so forth. No doubt with the robust demand fundamentals and the increase in the US dollar price for almonds over the last 5 years, we're certainly seeing a trend towards higher asset values in this space. And we certainly consider that trend will continue. Some opportunities for Olam. Well, we really need to get to full capacity on our yields on our orchards in Australia and the US, and we're certainly doing that. The orchards in Australia, for instance, are looking fantastic and are yielding exceptionally well this year. We're looking at value-add opportunities in Australia. We've recently, as I'm sure you're all aware, made a significant investment in first hulling and shelling and first-stage processing in Australia. We'll certainly look at second-stage processing down the road as well. We're going to expand into new markets as we increase our trading volumes out of the US. Certainly our trading business in the US is very complementary to our increase in our orchard acres, and that is going extremely well for us, and we see great opportunity to build on that business. And also we're looking at unlocking some of the value in our orchards in Australia with sale and leaseback opportunities along similar lines that you're aware of in California. Obviously, even though, as I said, I think I've painted a very robust industry and demand picture, there are obviously challenges. Weather and drought risk, we're an upstream, so weather is a big part of a risk that we have to deal with. We're making significant investments in our orchard portfolio on precision farming techniques, using GPS, using software programs, cutting-edge software programs, and really looking at extracting great value out of what we're doing on farm, but also reducing our risk to some of the weather impacts. And as I said, certainly with the increase in asset value, we want to continue to increase our orchard portfolio in California, but that will be challenging for us due to that asset increase profile that we've seen in recent years.
Let us see how Olam is positioning itself to participate in these long-term trends. As indicated in the previous slides, the first focus area for us is mechanization. Olam has been a pioneer in mechanizing cashew processing in the cashew industry, as well as pioneers in processing in Africa. When you saw the processing volumes in various countries, we were the ones who have pioneered processing in Africa. Since mechanization will lead to a lot of generation of cashew pieces, because a machine doesn't really know the size of raw cashew. When a machine processes, it breaks the cashews. The breakage is of an order which is higher percentage as compared to manual processing of cashews, where an individual worker does it. We would want to lead the development of cashew growth as ingredients. Just as an example, hazels today are sold, 80% of the hazels are sold as ingredients, but just 20% of cashews are sold as ingredients. 80% of cashews are sold as snacks today, not as ingredients. We will need to promote that. Towards this, we have set up 2 ingredient processing factories for cashews, one in Vietnam, one in India. Given the crop and production scenario, we would want to focus on securing supply through outgrower programs, which Dave will take you through under his sustainability presentation. We have a very unique Africa-centric model for cashews in terms of procuring raw cashews and in terms of processing of cashews, and our customers love this. We would want to use this to differentiate at every level in terms of offering a basket to the customers. A very important point is, given our leadership position in cashews, we would like to take the lead in promoting nutritional research for cashews. A lot of people still believe today that cashew is not as healthy as compared to almonds, but cashew is as healthy as almond, but no research has gone into it. We would want to lead research into crop harvesting, good crop practices, yield improvements, etc., like it happens in almonds. In cashews, because it happens or it grows in emerging markets, and because it is a smallholder farming, and the industry is highly fragmented, you don't really have such initiatives happening. We as the leader would want to go for it in the longer term. Moving on to some key challenges which we face. In the current core business which we are in, which is origination of raw cashews, processing of cashews and processing of ingredients, we would want to maximize volumes and extract operating leverage. But cashew is a cash crop. It's a cash product. There is no forward market for it in terms of exchange available to hedge your risk. which is why we would want to secure liquidity and work on liquidity by entering into strategic alliances with our customers so that we can maximize volumes. We have already started working on this, as Ashok will tell you when we reach the next part of the presentation, because strategic alliances are for nuts as a whole. It might not just be for cashews, it might be for a few nuts. Mechanization for us, yes, that is the way forward. It will happen. Obviously, it comes with its challenges of generation of pieces, training of workers, availability of technical manpower. That's an industry issue. The industry is sorting it out through better technology and through development of better machines. On a slightly different note, I just wanted to highlight the social impact which we create through cashews because of the unique position of the processing of cashews happening in Africa. For every 650 kilograms of cashew kernels consumed, we generate one year-round job in Africa and in Asia as well, because we process in India and Vietnam. Olam generates 25,000 such jobs. And majority of these jobs are created in rural communities in Africa and Asia, where there are very few alternate avenues for employment for these workers.
Olam's strategy, what are our focus areas to benefit from these trends and to position ourselves for the future? The first thing is that we don't want to expand the geographies that we are present in. We believe that we are in the right origins and we'll consolidate our position in the existing origins. That's one. Second important trend is about the Chinese growth and China potentially opening up the import market. So we have positioned ourselves through marketing offices in China and other emerging countries, and that's an area of focus as far as the business is concerned. The biggest opportunity, however, for us will be in United States. Like I mentioned before, it is one of the most promising origins as far as peanuts are concerned. We are present in ingredient manufacturing over there. We are present in midstream processing, but we are not present in shelling and upstream. And those are the areas that we will very much like to enter in the next few years whenever the right opportunity is available. We'll also like to expand our existing ingredient business in the United States. We have a great customer franchise with some of the largest confectionery manufacturers in the United States. Some of them are going global. They are setting up manufacturing in Asia. They want vendors who can supply similar standard, quality standard ingredients as they are used to back home. There could be possibilities of co-manufacturing for them or custom processing for them. That's another very important growth area that the team is going to be focused on. India consumes most of the peanuts it grows either as crush or raws. And there's a switch which is happening from raw peanuts to snack and ingredient applications. And we are setting up an ingredient manufacturing facility there, a blanching facility to cater to this demand. As far as Argentina and South Africa is concerned, really the big, we straddle pretty much the entire supply chain there, barring ingredients. And the focus there will be to sweat the existing assets harder and more, make the farming part of our arm more productive and grow the farming business in South Africa.
What is our response in Olam? Clearly, it's simple. We want to grow the value-added ingredient processing part. We want to follow our customers into the emerging markets. We want to try and see how we can, like in the peanut business, like in the almond business or the cashew business, we would like to follow our customer to these emerging markets. We definitely would like to look at seeing whether we can get into mechanized, corporatized farming in new origins like Chile, Georgia, Azerbaijan and Australia. Definitely Chile and Australia stack up a little higher because we have presence in Australia in the almond business, as you're aware. And we also have presence in Argentina. Chile is close by, same climatic conditions, same language, same terrain. And we can very easily transfer our skills and knowledge in almond farming into hazelnut farming because they are pretty much similarly farmed.
The Olam Lively Charter is about each product's commitment to grow our global footprint responsibly. It's comprised of striving to fulfill and integrate the 8 principles you see on the screen into our business models. In order to achieve the livelihood charter status, the initiatives must fulfill all these 8 principles. In California, our sustainability focus has been implementing a mindset where we produce more crop using less inputs, whether it's fertilizer, water, fuel, pesticides, or bees. Our targeted priorities include reducing the air pollution emissions, such as dust and greenhouse gases. Here's another example of the growing responsibly. The Ivory Coast Cashew team has developed a sustainable cashew growers program which fulfills all 8 principles of the Livelihood Charter. Their objectives are aligned with our NGO partners, including the Bill and Melinda Gates Foundation, to improve the livelihoods in this region. They just finished their second year of the program, and their objectives are to increase the yields from 300 kg hectare to 500 kgs, to increase the farm revenue by $100 a ton from good agricultural practices, and establish a traceable cashew supply of 40,000 farmers by 2016. Well, their results after the second year of the program is they increased the registered farmers by 67%, they increased their farm suppliers by 56%, and they increased their quantity suppliers by 62%. Again, these are a few of the examples of how you can do well by doing good by growing responsibly.
And then what are we actually attempting to do? So you can see what is our competitive advantage. How does all this work together for us? What is our competitive advantage in the nuts portfolio? And how are we building this competitive advantage in the nuts business? You can see that we have a unique portfolio of nuts. We have a unique capability, skills, and deep domain expertise in the nuts business. You can see from the presentations earlier that we have a global scale, breadth, and depth in our business, which means that we can supply year-round fresh material, fresh crop to all our customers. We can provide them proprietary market intelligence, which our competitors cannot, right? We can supply them fresh year-round almonds. So the southern hemisphere and the northern hemisphere, counter-cyclical crops. So that scale and that breadth and depth helps us in being able to be more competitive. The biggest thing for us is we have privileged customer relationships, what we call partner of choice. We believe we are and we want to be the partner of choice for our customers. And what does that mean? It means we have layers of differentiation which we offer to our customers compared to our competition, vendor managed inventory, food safety, traceability, sustainability, and what have you. We engage with our customers at various levels. It's not about engaging just with the purchase or the buyer. We engage with the R&D to see how can we develop applications. We engage with the production guys to ensure that our quality that we supply to them is good and the right quality that they want. Yeah? We engage with also the shipping and logistics and the supply chain guys to ensure that there's a smooth flow of material and their factories don't come to a grinding halt because of lack of supply from us. Right? We also build a deep understanding of the customer, the segment, and therefore we are able to develop what we call applications for them in terms of how can they use a nut better. A simple example would be telling them that today, because of the huge amount of breakages in the cashew business, because of mechanizing, we see the trend that the pieces generation will be much more coming into the future. So we encourage our customers to see how they can promote pieces because they are a good value for them compared to promoting the wholes. So that's a good example of telling our customers where we see the trend and where we see that they can participate and win along with us. We create a barrier to exit. Our customers in peanuts have been with us for donkey's years. And they find it very difficult to move out of us. Unless we goof up multiple times, it's very difficult for them to exit and find another new supplier. They're so happy dealing with us. The relationship is fantastic. Everything goes like clockwork. And therefore, we create and want to create those barriers to exit for our customer. Finally, I think we provide them supply security because of our global scale and breadth and the depth that we have in our nuts business. We provide them supply security. Every customer wants to know and be sure and comfortable that he's going to get his contract delivered. Because of our geographical spread, for example, if we have a supply disruption in Ivory Coast because of some political problems there, which we had 2 years ago, if our competitor was to supply only from Ivory Coast, he wouldn't be able to fulfill his contract. Whereas we were able to supply and fulfill our contracts because we are present in India, Vietnam, and other countries from where we could supply the same quality of cashews to our customer. All this is possible because we have a strong and connected and empowered team with strong entrepreneurial spirit. All the ideas of how to go about doing the business comes because of the entrepreneurial spirit, which Olam is very proud about, and we are proud about in our nuts business as well. We combine this with embedded strong processes and risk management solutions. Just to give you an example of a risk management solution that we have, our integration across the value chain helps us in being able to manage our risks better. Why? Take the almond business, for example. If you take the almond business, we are in the upstream. So when the market is trending upwards, we tend to make a little bit more money in the upstream because we are the growers. And as I said, the grower appropriates the maximum part of the value chain, right? But at the same time, it's a commodity market. Prices can come down. Supply, there could be an excess in supply. But because we are present in the ingredient segment, it's far more sticky with the customer. We have created those barriers to exit. We command, and the price is reasonably inelastic at the ingredient level. They use only about 2% of that cashew or the almond or the peanut ingredient in their final product by value. It is a very small portion of what goes into the chocolate bar or that breakfast cereal of nuts. And therefore, it is reasonably price inelastic for that customer because what he wants is food safety, quality. He wants to ensure that he doesn't have a product recall. And he's willing to pay you a premium. And therefore, at the ingredient level, your prices are reasonably sticky. And therefore, when prices do come down, we may take a little bit of a beating at the farming level because we are growers of the almonds, but we make up some part of it from the ingredient level because prices are sticky, because then we are able to compete more appropriately with that customer. So that is the point on integration, and that's how integration helps us. By being present in all parts of the value chain, we can manage the situation either way when the markets are up or down, and we participate in the supply chain margins as we've always been mentioning and maintaining with you. I mentioned about the global presence helping us manage supply chain disruptions. Our competitive landscape in most of our businesses in the participating segments, we have a relative market share in excess of 2 times to our nearest competitor. Why is that? It's not for any great reason. Every other competitor of ours is a family-owned business. They don't have the scale and the breadth, and they don't have the ability to be able to scale this up and transfer knowledge and learning from one place to another, which only a good corporate can do. As a family-owned business, I can only be either in India or in Vietnam or in Brazil or in the US. I don't have the ability because I don't have the people. I have not developed the people and the talent to be able to make it fungible and move across geographies. And therefore, our second nearest competitor in most of the businesses has a market share less than half of ours. Finally, the most important way to be able to ensure, because like Amit said, it's a cash product. We have no futures market. How do we manage the risk in the business? We need to have those strategic alliances. It's a need for the business to have those strategic alliances with our customers, with our partners, so that we are able to hedge our risk and therefore grow our volumes. And therefore, strategic alliances is the way we want to compete. The great example here is cashews are harvested in the northern hemisphere. They are harvested between February and June. Yeah, we have to buy the cashew between February and June and process it throughout the entire year, right until the next February. Our customers, we need to have customers who will off-take what we buy at that point in time until next February. And therefore, we need to have long-term contracts with our customers. And that's how strategic alliances are useful and helpful for us. The famous strategy on a page of Olam. Very quickly, there are 5 strategic planks that we are following. Driving the core to full potential, which will generate the cash flows for us. Pursue midstream opportunities, which is what we spoke to you about. In the existing nuts, expand upstream possibilities in existing nuts. Everything, the first 3 are to do with what we are doing today, do it better. Expand into new nut categories, which I mentioned to you about, pecans, walnuts, pistachios. And extract value across nuts, which is extracting synergies from our customers and from our strategic alliances.